Brexit. The term Brexit is the shorter version of British exit from the fold of European Union. However, this is not the first such term. Earlier, we were hearing a lot about Grexit or Greek exit from European Union when it was facing the severe economic crisis. By the way, as with Brexit, the Britain voted in a referendum to leave the economic fold of EU in mid 2016. But what is most striking is the resultant political turmoil that Britain went through and the sentimental impacts that were visible across the global economy on the basis of the assumed implications of the development. Given the experiences, we have taken up this issue for discussion today. Now, before getting into the issue, let us try to understand the significance of the issue from the point of civil services examination. The issue is important primarily for mains. However, there is an off chance of it being raised in prelims as a question of current affairs. As in mains, the issue has the potential of being raised both in General Studies Paper 2 in the form of an issue of international relations and in General Studies Paper 3 in the form of the possible implications that this development may have on Indian economy. We would try to address both these aspects one by one. What is Brexit? As we have already mentioned, the genesis of the term is from the combination of two words, British and exit. The genesis of the word can be credited to Peter Wilding, who is supposed to have coined the term in a 2012 publication in Euroactiv blog post. However, it is noteworthy that the referendum of 2016, which gave an official stamp of approval to the wish of the people of UK to exit the economic grouping of European countries, was not the first attempt of this type. Previously, in 1975, a similar attempt was made. In this backdrop, let us try to understand the background of the development. Background of Brexit. European Union, as we know today, came into existence in 1993 with the signing of Maastricht Treaty. Previously, the grouping was more of economic in nature and was known as European Economic Community, whose objective was more about creating a common market rather than achieving political unity of any kind. It is noteworthy that Britain was not an original member of EEC, as it was not a signatory of Treaty of Rome. In 1963, that is after 6 years of the formation of EEC, Britain for the first time applied for the membership of EEC. However, due to strong objections from the then President of France, Charles de Gaulle, both the first two applications of Britain, submitted in 1963 and 1967, were rejected. Finally, after de Gaulle relinquished his presidency, the third application of Britain, submitted in 1973, was accepted. Yet, within a year of signing the agreement in 1974, on the perceived notion of incompatibility of British economy with the rest of Europe due to a number of aspects of Britain's economy, from working practices to agriculture, the voice of dissociation from EEC, or at least renegotiating the treaty, was getting raised, which culminated into the referendum of 1975. However, in the referendum of 1975, approximately 67% of the electorate voted in favor of staying in EEC. It also calls for being mentioned that both in 1993 and 1994, just after formation of European Union, saw the formation of two Eurosceptic parties in Britain. These were UK Independence Party and the Referendum Party, respectively. Out of the two, UKIP gained the biggest share of votes in 2014 European elections, which was for the first time since 1910 general election in UK that any party other than the Labour and the Conservative had taken the largest share of the vote in a nationwide election. This was an indication clear enough about the swing of mood in the general public in respect of European Union. Given this background, let us now try to understand the possible implications that this may have on the global as well as Indian economy. Possible implications of Brexit and their counter-arguments. The Brexit victory sent economic shockwaves through global markets, and UK stocks had their worst drop since the financial crisis. Emergency steps are now being taken to calm the economic turmoil after the pound fell to its lowest level since 1985. Britain had already lost its top AAA credit rating. There is ongoing uncertainty over what will happen when Britain leaves the EU because it has to make new trade agreements with the rest of the world. As per the Bank of England Governor Mark Carney, some market and economic volatility can be expected as this process unfolds, and there is a possibility of the country slipping into recession. Though supporters of Brexit argue that EU countries have every incentive keep trading with UK, which is a large importer of goods and services. But Europhiles worry that foreign companies will be less likely to invest there and could relocate their headquarters if Britain loses access to the EU single market. During the referendum campaign, Eurosceptics slammed a Confederation of British Industries report that claimed that Brexit would cause a £100 billion shock to the UK economy. The Treasury was also accused of doom and gloom after predicting that a Brexit would cost households £4,300 a year by 2030, leaving Britain worse off for decades. Anti-EU campaigners have rubbished claims that a EU exit will push up the cost of weekly shop, everyday items and travel abroad. But there are still concerns about what will happen to Britain's expats living in European countries such as Spain. Eurosceptics say Brexit will allow Britain to take back control of its borders in order to curb immigration and increase security. Britain will no longer have to accept free movement of people from Europe, which Brexiters say puts pressure on the public services such as the National Health Services and schools. Brexit campaigners have said that Britain will be free to impose an Australian-type point system to better manage immigration and fill skill shortages there. But the Remain campaign believes that Brexit will hit the British economy, which relies on the free movement of EU migrant workers such as health professionals. Some Europhiles have also said that Brexit will compromise the UK's ability to fight cross-border crime and terrorism. Brexit campaigners believe that British voters have taken a once-in-a-lifetime opportunity to restore Britain's sovereignty. Eurosceptics see EU institutions as inherently undemocratic and argue that laws that affect the UK should not be decided by bureaucrats in Brussels. But Europhiles argue that the UK will now wield less power on the international stage because it will not be in the room when key decisions are made. There are also fears that British workers, expats and travellers will lose key rights currently enshrined under EU law. The biggest worry about the Brexit vote is that it has opened a Pandora's box. Emboldened by the Brexit outcome, groups opposed to EU membership in other European countries have already started demanding their own referendums. EU chiefs have been forced into damage control to defend the integrity of the European bloc amid fears that Brexit could tear Europe apart. Implications of Brexit on India. The sudden increase in global risk aversion can impact the inflow from foreign portfolio investors to India, though domestic institutional investors could lend some support. The Indian market, however, has to worry about another more major event, the upcoming big foreign currency non-resident fixed deposit redemption due in September. Experts feel that the FCNR redemption in September should not be a big worry since the RBI has accumulated enough forex reserves. We are pretty safe in terms of repayments. How global central banks respond to Brexit will be crucial to how the markets and economies behave. More central bank intervention can't be ruled out to minimize the volatility in the financial markets. The liquidity situation globally is likely to improve from the current levels, which would be a positive for interest rates. However, the recent spike in inflationary pressure may force RBI to not go for accelerated cuts. Now, though the RBI may not go for accelerated rate cuts, the rate direction is still downward. This means short-term investors can bet on rate-sensitive sectors such as auto, infrastructure, banking, etc. Brexit may have an impact on India's GDP growth as well. However, there is no need for Indian economy to worry about this small fall in the growth rate that presently is being predicted, because we will still be the fastest growing major economy of the world. The government is also taking steps to boost the GDP growth, and steps such as the recent FDI liberalization will help in achieving it. When we look at the whole picture, it emerges that in the long run, people need not worry about Brexit. Also, even though India will be impacted by the global turmoil, it will still be much better off. Thank you.